Welcome back to Pennywise Perspectives. Today, we will be talking about money, the essential medium of exchange in our modern world, which has a rich and intricate history that spans thousands of years. It's a story of innovation, trust, and the evolution of society. In this video, we'll take a fascinating journey through the history of money, exploring where it comes from, how it began, and how it works. The origins of money. The concept of money is deeply intertwined with the evolution of human societies. It didn't suddenly materialize, but rather emerged gradually as a response to the limitations of barter systems. In the early days of human communities, bartering was the primary means of obtaining goods and services. However, this method had significant shortcomings. One of the major challenges was the necessity for a double coincidence of wants, where two parties had to simultaneously desire each other's goods to make an exchange. This inherent inefficiency in barter systems spurred the need for a more organized and efficient system of exchange. To overcome these limitations, societies began adopting commodity money. Commodity money, unlike the abstract nature of modern currencies, had intrinsic value. It consisted of physical items like gold, silver, livestock, or grains that were widely accepted as valuable. This transition marked a significant step forward in the history of money. These commodities became a universal medium of exchange, effectively addressing the shortcomings of barter systems. It established a standardized unit of value that simplified trade and paved the way for more complex economic transactions. The birth of coins. One of the most transformative developments in the history of money was the invention of coinage. The introduction of standardized coins around 600 BC, credited to the Kingdom of Lydia, located in what is now modern-day Turkey, marked a pivotal moment in human economic history. These early coins were crafted from a naturally occurring mixture of gold and silver known as electrum. Coins brought about a revolution in trade. They provided a consistent and universally accepted unit of value that was easily transportable. What set coins apart was their standardized weight and purity, which was guaranteed by the markings they bore. This innovation significantly reduced the risk of fraud and enhanced trust in transactions. The introduction of coins set the stage for the widespread use of currency as we know it today. Paper money and banking. As human societies continued to grow and expand their trade networks, the need for more flexible forms of money became increasingly evident. This need led to the creation of paper money. The Chinese, during the Tang Dynasty, 618–907 AD, were among the earliest pioneers of paper money as a means of trade. This innovation was so significant that even Marco Polo, the famous Venetian explorer, documented its use during his extensive travels in the 13th century. The adoption of paper money marked a profound shift in the history of money. It represented a transition from physical commodities as a medium of exchange to more abstract representations of value. Paper money's widespread acceptance was made possible by the rise of banking institutions. These institutions issued banknotes that could be exchanged for a predetermined amount of a commodity, often gold or silver, upon demand. Over time, this system evolved into what we now recognize as modern fiat currency. In this system, the value is not tied to a physical commodity like gold, but is instead guaranteed by the issuing government, a concept that underpins the currencies we use today. The history of money is a testament to humanity's ability to adapt and innovate. From the limitations of barter systems to the intricacies of modern digital transactions, the evolution of money reflects our ever-changing economic landscape. Understanding this history provides valuable insights into the foundations of our financial systems and the principles that underlie our global economy. The age of digital currency. In recent decades, a significant paradigm shift has unfolded in the history of money with the advent of digital currency. The proliferation of the internet and the development of advanced cryptographic technologies paved the way for the emergence of cryptocurrencies, the most notable being Bitcoin. What sets cryptocurrencies apart from traditional forms of money is their purely digital nature and their reliance on a decentralized ledger known as the blockchain to record transactions. Cryptocurrencies offer a level of security and transparency that is unparalleled in traditional financial systems. They operate independently of governments and central banks, introducing a novel dimension to the concept of financial sovereignty. This newfound financial autonomy has ignited debates about the potential future role of digital currencies within the global financial landscape. As cryptocurrencies continue to evolve and gain broader acceptance, their impact on the global economy remains a subject of intense scrutiny. The rise of digital currency is not merely a technological innovation. It has profound implications for financial systems, monetary policies, and the very nature of money itself. How money works today. In contemporary society, Money serves three fundamental functions. It acts as a medium of exchange, a unit of account, and a store of value. As a medium of exchange, money facilitates transactions by enabling individuals to buy and sell goods and services. It also serves as a unit of account, providing a common measure of value that allows us to compare the worth of different items. Moreover, money functions as a store of value, allowing individuals to save and invest their wealth for future use. Today's financial system is intricate and multifaceted, encompassing various forms of money. These include physical cash, digital bank deposits, and the aforementioned cryptocurrencies, among others. These diverse forms of money coexist and interact within the broader economy. Central banks play a pivotal role in regulating the money supply and maintaining economic stability. They exert control over the issuance of physical cash, set interest rates, and implement monetary policies designed to influence economic conditions. These policies are instrumental in managing inflation, promoting economic growth, and ensuring the stability of the financial system. In an era where digital transactions are becoming increasingly ubiquitous, the concept of money continues to undergo transformation. Innovations such as mobile payment apps and contactless cards are reshaping how financial transactions are conducted. Money is becoming more accessible and convenient than ever before, reflecting society's ongoing pursuit of greater efficiency and adaptability in the realm of finance. These changes are indicative of the dynamic nature of money, a concept that has continually evolved throughout history and will undoubtedly continue to do so in the future. The history of money is a testament to human ingenuity and adaptability. It has transformed from simple barter systems to complex digital networks. Understanding the origins and evolution of money provides valuable insights into the foundations of modern economies. As technology continues to advance, it's likely that the story of money will have many more chapters to be written. In this video, we've only scratched the surface of this fascinating topic. Money's history is filled with intriguing tales of invention, exploration, and societal change, and it continues to shape our lives in profound ways. Please comment below any money-related topics you'd like for me to cover in a future video. If you loved today's valuable video, consider smashing that like and subscribe button. Don't forget to share it with a friend. Together, let's embrace abundance, develop financial intelligence, and make our dreams of financial freedom a reality. Farm, have you seen these awesome t-shirts? Make sure to check out my Etsy shop by using the link in the description below and rock these funny tees like a boss. Thanks for watching, and we'll catch you in the next video.